Good morning, everybody. It's the 25th of July. We're Signal Centre Talking Bull. I'm Joe, joined by Steve. Good morning, Steve.
Good morning.
How are you?
Tickety-boo, thank you very much.
Superb. Good to hear. Okay, as usual, going to go through the latest headlines, what's moving markets. Then we're going to go through some charts looking at cryptocurrencies, commodities, FX, and indices. If there are any requests on any of those markets or anything else for that matter that you would like us to take a look at, please feel free to post it up on the stream chats, and we'll do our best to cover as many markets as we possibly can. We'll also go through the Guns Ahead challenge, so we'll set up 2 trades for the day ahead. And hopefully we can make a profit on those, but we'll get to that in a bit. First up, let's do the headlines. So Eurozone PMI data slides further. Yesterday we saw the PMI business confidence data recorded a further decline in the manufacturing sector to a 38-month low of 42.7 for July from 43.4 the previous month. Also, this was below the expectations of 43.5. There was also a slowdown in the services sector and a further decline in the input price inflation, with that at its lowest reading since November 2020. The PMI data in the UK was also weak. The manufacturing index there again dipped to a 38-month low of 45 from 46.5 and below the consensus forecast of 46.1. In the US, the data was a little bit more mixed. According to the flash data, the US PMI manufacturing index recovered to a 3-month high of 49 for July from 46.3 previously and well above the consensus forecast of 46.3. The rate of increase in the services sector prices, however, slowed to its weakest reading since October 2020, but there was a faster rate of increase in the services sector prices. There's been further promise of stimulus from China. They stated that the country would step up macroeconomic adjustments with a focus on expanding domestic demand. The comments helped underpin risk appetite with gains for equities, although the yen was resilient. Today we've got some German data due. We've got the latest IFO business confidence data, which will be released later on. Markets expect a further retreat to a 6-month low there. We've got consumer confidence data due in the US as well. That will be released later on today. Consensus forecast there are for a recovery to 112.1 from 109.7. This week is all about key rate decisions, and there will be some caution ahead of that with major central bank policy decisions due later this week. So there could be some significant position adjustment ahead of that, and maybe we're already seeing that in the dollar market at the moment. With some potential short covering taking place. So that's it for the headlines. Let's take a look at some charts. Steve, kick us off with a look at cryptocurrencies, if you don't mind.
Yeah, sure. Let me share my screen.
A couple of requests already, looking at Euro, Yen, and Swiss franc versus Japanese yen. So we'll get to those shortly.
Okay. Yeah, Bitcoin. Let's take a little look about where we are on the longer term chart. Obviously, we got this band of resistance. It used to be a band of support all the way back in June 21, and we can see what a good job it did there. And once we broke through it, though, it's acted as resistance and has done a sterling job also. The week of the 10th of July posted a high at 31,818 and rejected. So all these doji candles, shooting star type candles, hanging man candles, and bearish looking candles warn of maybe a potential top in this move. We've still got, we're still clinging on to hope that Bitcoin can weather this storm of bearishness, but this week has been the worst. We've been down to 28,842, and that is the sort of bottom of this range that we've got up here. So a break below there, close below that 28,800 level would be negative. That's the weekly chart. The daily chart shows a bit of a shorter term range that we've been trapped in, and we did poke our head above it 13th of July, but smack back down straight away with a bearish engulfing candle. And we've been putting this level of support 29,500 under pressure for a good week or so now, and finally broke through it yesterday. So we are below it. We did close below it, so that's negative potential really This could be a false break. Let's see how today plays out. If we do get an extension lower, then really it's one of those go with the flow. Next real level of support all the way down at 24,500. So be careful with that one. The real one that everyone's talking about, or not necessarily the real one, but the one that everyone's talking about is XRP. Ripple won its case against the SEC, and the explosive move higher almost saw a 100% gain at one point in XRP against US dollar. That got up to 95 cents before pulling back. Since it's pulled back, we formed a next level of resistance around about 85 cents. But since then, over the last week, it's just been one-way traffic lower. Next level of support, I would say, is around about this 66-cent level. That's the one to watch. And looks like it could be tested today. We're getting a bit of a crossover on the MACD. So technically, it doesn't look great for XRP. Like we said before, this explosive move higher really probably needs to retest at least that 58-cent level before we can get confident about a bottom being in place. Let's take a look at commodities. Gold has been quite active. The daily chart on gold, I drew this potential for an inverse head and shoulders formation a couple of days ago, last week in fact, and we managed. This was after I think we stalled at this 50% retracement around about the 1980 level. We've pulled back over the last 4 days. Today it's been a little bit more positive. We've bounced off the lows, which were around about 1964. So maybe we're having a little bit of a stall in this sell-off, all really based around what the dollar's doing, I suppose. But yeah, if we are seeing an inverse head and shoulders, it's really shaping up quite nicely. The level of support below 1935 is obviously a key one, quite a pivotal level for us. I would say long above there, short below. That's the sort of like how important that level is. And then we've got that level just below 1900 as the next real level of support. Above, we're eyeing 2000 as a resistance. That's a 61.8% fib retracement from when we rallied close to the all-time high and then retraced all the way back down to that low at 1893. So they're the levels to watch really in gold, starting off on the front foot this morning. Let's just check this is all up to date. It's not. The chart seems to try and trick me every time. So we've rallied to the just stalled in front of that 78.6% fib retracement. That's from the high of 12th of April all the way down to the really aggressive sell-off, the low of 4th of May. And we've bottomed out, retraced really nicely and broken up above resistance level around about 74.70. Approaching 79.38, which is that 78.6% fib. So close to $80, and that would be quite a significant. We are testing quite a significant level. This is where we gapped up overnight or over the weekend from the 31st of March to the 3rd of April. So there should be a little bit of resistance there, which will be trying to stem this upward flow. But we've had a really nice corrective move higher. Nothing else to look at, Joe. Let's take a look at the dollar and all the PALs before we dive into indices and then the gun to head.
Okay, cool. So as I mentioned in the summary of what's going on in the market in the headlines, there was some potential for some position adjustment ahead of the key rate decisions this week. The strength in the dollar has been pretty persistent over the last 4 or 5 sessions. So we posted this doji candle here on Tuesday last week, and that really triggered a decent move to the upside. You can see some big green candles have formed on the chart, taking out that resistance level there at 100.82 and 101.01 and powered through. So the next level of resistance on the upside is at 102.00. So potentially some short covering here. Obviously, the overall trend remains very bearish, as we can see. Prices have continued to move lower. Then we formed this kind of range, big support at the 100.82 level, which eventually broke down. So we're powering back through that at the moment. I noticed on the RSI, this was looking potentially as though it was setting up a sequence of lower highs, potentially reversing and turning around today, maybe an indicator that prices are about to stall a bit here, given that it's had a pretty significant move to the upside. So could be an opportunity maybe to fade this dollar move, but clearly it has been pretty powerful. And the issue that we've got at the minute is that we've got no real clear signs of reversal just yet. We need to see really the formation of an interesting looking reversal candle, or ideally for it to rally into some significant resistance, which at the minute we just don't have. So let's have a look at how this is impacting the currencies against it. Let's take a look at sterling versus US dollar. We can see this has pulled back to trend support. We've got some horizontal support around 128.48, which we're just trading around at the moment. And if we go back to the start of this move back in September 22, we can see we've got a nice pullback to that level. So potentially an opportunity for a long entry there on sterling US dollar, if you are to believe that this dollar move is going to run out of steam. Taking a look at euro US dollar, we can see that there's been a pullback in price here, which kind of represents what we've seen on the US dollar. In terms of the wicks of the candles dating back to April earlier this year, we have overshot that support level at 110.95. If we go by the sort of bodies of the candles somewhere in and around this kind of region, we could argue maybe that we are into some support right here, depending on how you draw your lines. I would tend to go by the wicks because they're the ones that leave the markers. And I think markets have a memory for those sort of things. But yeah, maybe interesting support forming here in a kind of band of support potentially on euro US dollar, something along those lines. So maybe an opportunity to think about starting to get long. It's just whether or not you want to take that risk ahead of key interest rate decisions from the US. Let's take a look at dollar yen, see what's happening there, because obviously we've had some more verbal intervention from China, which is affecting the Asian region. We can see there was a pullback there in price with dollar weakness, but then we've seen this dollar strength come back, and it's been a pretty strong move higher. So that support level there at 138.19 has done a fantastic job and would have been a really good entry point to get long on that market. Looks to be stalling a little bit over the last couple of days, including today. So obviously a long way to go, a little bit of indecision as things stand. Let's take a look then at some of these requests that have come in. So we are going to take a look at euro yen, and I'll bring that up first. So this is the daily chart. As we can see, the trend is moving higher, but we've noted that there is some resistance forming at 157.99 or 158.00 if we want to round it up. We can see that this has been touched on a couple of occasions now, first back in June, then again we got another touch here on the 21st of July before seeing a pretty sharp rejection. I've drawn this dotted line here at 153.32 because potentially what we could be doing here is forming some sort of double top formation. It's very early to call it that, because in order to complete that pattern, we need to see a break of this level here at 153.32. But it may be that we trade in a bit of a range in the short term on euro US dollar, euro yen. We've also got this uptrend support line, which is going to come in around about this level here, which is around 155.20. So that still may provide some support as well. If we take a look at the intraday chart here, just to see what's shaping up on this side of things, again, we can highlight this kind of resistance level at 157.98. It's pretty clear there. We saw a big move into that level on Friday before a rejection. In the short term, there is a bit of a trend line in place there, which seems to be holding prices up. And there was quite a nice reaction from that level as well. So for the time being, I think given that the sort of longer term view still remains pretty bullish, there are opportunities there to buy the dip, but just be a little bit cautious because we do have this big area of resistance here. So if you're going to trade it short term, maybe look for another retest of those highs. And if you were to set up a trade from current levels, something along the lines of this, targeting a move to those highs, and you'd want to get your stop. Well, if it breaks that trend line, you probably want to be thinking about getting out, and that makes things pretty tight. It means you can't put a stop loss below these lows here from Monday without impacting your risk reward negatively. So that would be, you may just be able to scrape a 2-to-1 out of that if you were to buy now on euro yen. The other request is for Swiss franc Japanese yen. This looks very, very strong indeed on the daily chart. As we can see here, there is a major uptrend in place. No signs of that faltering at the moment, no real indications of reversals judging by the candles. And we actually have to go a fairly long way back to see where this dotted line originated from. And it's actually back from these highs here, which was in 1979. So that's the kind of historic levels that we're talking about here on Swiss franc Japanese yen. It's trading up at all-time highs and no immediate signs of that slowing. On the intraday charts, we could see that there is a short-term uptrend in place. There was a little bit of a pullback there, potentially forming a bit of a wedge or a flag or a continuation pattern. We've smashed through that, and prices look to be set to maybe go on and retest these previous highs at 163.98. So looking pretty strong on that front. Dodger, going to take a look now for you at New Zealand dollar, Swiss franc. So let me just bring that up. We'll start off with the daily chart just to put some longer term context on this. So we can see in the long term, the prices are trading in very much a downtrend. No signs of things reversing at the moment on this. We can see there was some support that formed at 54.33, but then prices broke below that. We had this arrow on the chart indicating the next level of support below, which comes in at 52.99 or 53.00. And if we go back to these lows here from the COVID lows back in March 20, we can see that that is a pretty significant line on the charts, and potentially prices are going to head back to that level. So clearly in the downtrend, resistance above at 54.33, selling into those levels there, targeting a move back down to those lows is the preferred option. Again, let's take a quick look at the hourly chart, see what's happening here. We can see that there is some resistance building around this level at 54.05, couple of touch points there. Each time it's got there, we've seen a bit of a rejection, and we've seen that again this morning, and prices look to be on the way back lower. So from a short-term perspective, with this resistance in place, we could potentially set up a short trade above, putting a stop loss above these highs. I've gone back to this one on the left-hand side just to give it that extra bit of protection. It doesn't quite give me 2 to 1. So if I were to trade that, maybe I'd have to tighten that up a little bit, something around that. 54.09 as a stop, targeting a move back down to these lows that we posted on Sunday night at 53.33. Okay, I'll leave it there on the currencies. Steve, you can take a look at the indices for us.
Yeah, just had a request for gasoline. I presume that's natural gas, but correct me if I'm wrong. Taking a look at really sort of this bottoming formation, prices have held at that $2 level, and which we've really sort of tested since, well, first time we tested was 22nd of February this year. Then we had that big reaction higher up towards $3, retracement, aggressive move lower, but we've managed to hold above the $2 level. More recently, we've rallied from 215. We've exploded higher yesterday. Prices have broken through resistance at 242 with a really, really strong candle, and we'll look to be targeting that previous swing high at 278.5. Overall, if we're looking at a maybe slightly longer term view on this, these bottoms obviously sort of like we could be forming a really decent bottom. This double bottom formation is probably the most recently interesting one, although there is a larger double bottom here. We'll focus on this one here. So to basically get an idea of what we need to see for this to be confirmed, we need to see a break of 278.5. If we do get a break there, then the measured move target for natural gas would be a move to just under $3.50. You can see we've extended the low to the neckline and extended it higher, and that gives you a measured move target up there. Now, also, don't forget how we left this big gap on the chart. It seems like an age ago, but it was only at the end of last year in December. But that potentially is also one that we'll be looking at. That comes in around about a 38.2% Fibonacci retracement of the down move from the high of November last year. I mean, you can see what an exponential sell-off that was, leaving that gap. And it's only a 38.2% fib. It's not really beyond the realms of possibility. It's a natural Fibonacci retracement level. So even a move to 440 could be on the cards, but we do need to get some real inspiration for natural gas at the moment. It's languishing. Coming up to, I know we haven't quite got to summer, but as soon as we get to summer, we start thinking about winter. Maybe that's when it'll happen.
Yeah, summer would be nice. If the weather gods are listening, please feel free to send it to the UK. Obviously, we know some people in Europe are really suffering with extreme heat, but yeah, if we
Yeah,
can
it's not
get
extreme heat, Joe. It's
is
not.
it not? What is
No,
it?
they've basically started to measure differently. They used to measure air temperature. They've now started to move ground temperature to scare the life out of us.
Right.
So it's all a load of rubbish, really, isn't it?
Well, people in Greece will probably disagree, but
Yeah, but I think that's people smoking. That's smoking.
oh,
You
is
should
it?
ban smoking. Yes, ban
Okay,
smoking, and then people won't throw cigarettes out the window.
right. Okay,
So
that's
anyway,
Steve's
let's leave it there.
advice today. Yeah, obviously, if anybody is affected by the Greece thing, we feel very sorry for you and hope you're very safe and well. But yeah, let's move on quickly. Steve, look at the indices for us, please.
Okay. Chloe was in Rhodes last week. That was like, she timed that well.
Yeah.
Jesus. Yeah, so let's take a look at FTSE. FTSE's had a really decent rally over the last couple of weeks. We've broken up through resistance. We're now challenging this level around about 7,700. Well, it's only Tuesday, so we've got to give it a little bit of time. We've already had a dip back to 76.20 and a rallied higher from there, so it looks quite positive overall. If we look at the daily chart, yesterday's daily chart wasn't great, bit of a hanging man candle, but we've extended higher this morning. And as long as we, I think, maintain levels above that 76.20, this has got potential to go further, just like challenging that previous swing high from the 16th of June. Next level of resistance would be up at 78.15. So that's the one to watch in FTSE. In the DAX, forever the bear, Steve, looking for maybe a double right shoulder to sort of like finish off this topping formation, but I'm not sold on it completely. Although the candles over the last couple of days have been positive, they're not really sort of pushing much higher than the previous resistance around about 16,200. So yeah, on the downside, really support coming in at the 16,000 levels. So a break below 16,000 opened up the downside, but otherwise very much focused on the move higher. Dow, great day yesterday, extended higher again. We're up to levels that we haven't seen since 21st of April last year. So back to the heady heights of there. Obviously, the all-time high is a little bit higher, but should find a little bit of resistance. We've had quite an aggressive, strong rally since breaking through resistance. And support probably around about the 35,170 level. But people aren't thinking about support at the moment. They're just thinking about higher highs. The Nasdaq that had a bit of a pullback. Obviously, we've got earnings out, and from the tech sector, not so great. Nice little evening star formation formed, and resistance now coming in at 15,620 with support. Probably yesterday's low would be a good marker, 15,378. And S&Ps are hugging those highs still. The most recent high last Wednesday, 4580. And if we look at that on a long-term chart, we're above the 78.6. We've still got a little bit to go before we hit a potential horizontal resistance level coming in at 4636. So Dow and S&Ps look quite positive. The Nasdaq, the tech sector, not so great, but still plenty of time to go this week.
Okay, thank you very much, Steve. So let's move on to the gun to the head challenge then. So that's where Steve and I pick trade ideas on the stream as if we had a gun to our head. A couple of basic rules to follow. Must have stops and targets on these trade ideas. must have risk reward ratios of 2-to-1 or better. The trades are closed at 9 p.m. unless the stops or the targets are hit, and we risk 1% of trading capital per trade. So the last show we did was Thursday, or did you do one on Friday?
Might have done one Friday. I can't remember, Joe.
Okay.
Let's have a look
Can we
at
have a
the
quick
P&L.
look at the account and see where we're at?
Oh, not very
Not
good.
good. No. So we started off at 2,000. We're down at 1,701.
15% down, mate. Not
Yeah,
great.
that's not great
No,
drawing
the
there.
last trade we did was got stopped out in gold, got stopped out in sterling Oz.
Okay. Right, we need to get back on the horse then and have another crack today. Anything standing out for you?
Just flicking through, I'm sort of erring towards selling euro, but I'm just trying to pick what currency I'm going to go with. If you've got anything, Joe, by all means shout, and I can jump in. Let's selling euro sterling. It's just broken through support level. Daily chart has rejected quite nicely, and I love selling euro sterling because I always think the sterling's so wonderful. So yeah, I might do that. Sell euro sterling. Just gonna go and look for have quite a tight stop. Obviously, quite aggressive. We're only at intraday trading, and entry price there, stop price there, target price there. We need to really sort of like focus on something around there, get this stop a bit tighter. What does that give us? That's no good, is it? Got to have the stop a lot tighter than that. Right, 86. How about that? That'll do. 2.5 to 1 risk reward. Stops at 86.31.6 and targeting a move to 85.78. So let's get that on. Trade, create new order. Going to sell it. You're going to say something, Joe? You're going to say
No.
don't do it?
No. I was going to say double it. No.
86.316. That's risking £17, as you can see. 85.783. There we go. We're in.
Okay.
Yeah, selling euro sterling.
Good luck. I'm going to take a look at Eurostoxx 50. This is the daily chart. We can see prices have been trapped in a bit of a range in the short term. 44.15 seems to be the sort of upper boundary, lower boundary coming in at 42.10. If we look at price action of late, we can see it's been pretty choppy and indecisive, maybe an even tighter range forming here in the very short term to potentially take advantage of. So looking at the hourly chart, what's kind of sparked my interest is this candle that's formed over the last 30 minutes, a pretty swift turnaround here. So yeah, let's have a crack at this, shall we? Let's sell Eurostoxx 50. Let's put a stop loss at just up those highs, 44. Let's go 44.01, and let's target a pretty chunky pullback, shall we? Let's take a look at this up move here. Let's get some fibs on just to give me a bit of a target. So we've got 38.2. I need to go a bit more aggressive than that. So I'm just going to have to scrape a 2-to-1 here at 43.25 on Eurostoxx 50.
Okay. Go. what's the target? So, sorry, Joe, 40.
325.
It's about 2.18 to 1. Is that right?
Yep.
Okay, we can only manage to get like a £15 trade on there, which is a little bit less than what 1%.
That's okay.
Targeting a move to 43.25, which will be a £30 winner.
Okay, happy
Good luck.
days. Right, okay, let's take a look at the data ahead today. As much as mentioned on the stream, we do have some data due out very soon in Europe, so that could certainly impact both of our trades. We've got the German IFO index number out at 9 a.m. UK, so that's in about 25 minutes. 3 o'clock today, we've got the US consumer confidence number. That will be well watched, but probably overshadowed by the fact that we've got the US Federal Reserve policy decision due out tomorrow. That will be after European hours around 7 o'clock. We have got some Australian inflation data overnight as well at 2:30 a.m. UK time. And then for the rest of the week, after that US policy decision, we've got the ECB and the Bank of Japan. Okay, that is it from Steve and I today. Thank you everybody for watching and taking part. We appreciate it as always. And we hope you all have a wonderful day ahead.
Lovely. Have a good day.
Cheers. Bye.